Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Tuesday, July the 13th. The year's 2021. Line in the Sand, Part 2 with Walmal. As always, these videos are for educational purposes only. Your results may differ from mine and from Walmal. Walmal, you got some results you might
Yeah,
want
it
to
was.
talk about.
I don't know what happened here, but I had gone short on the pound dollar at roughly. Let me tell you, at roughly 55, and it was just coming off a three ball, and I just, was just looking at the chart from a technical point of view. This thing's going to go and drop, is what I was thinking, and then all of a sudden news came out, and the funny thing is with CPI sometimes moves it, but it normally moves it 5-6 pips, no big deal. And I had staged in or stacked in on this trade two other times, so I was stacked in pretty heavy, and all of a sudden it dropped. It's now dropped. I'll tell you right now, from where I got in, it's dropped in 55 pips, but I popped to get out at 35, and I'm not even quite sure how many pips I went and picked up. Probably between the three trades, if you add all three together, probably somewhere around 90 pips I picked up, something crazy like that, or 80 pips probably. Actually, they pulled it from me. I just looked it up. They went and they gave me 30 pips on each of the trades, but. It just shows you, though, what can happen. And, the thing is that's, Tiro, the thing that's kind of scary about this in one sense, and something that we have to be all paying attention to as traders, is that if I had my stop loss there, it probably wouldn't have been honored. Because the reality was they weren't honoring my exits, my market orders to exit. So maybe my stops wouldn't have even been honored as well. Don't know, but that's a possibility of what may have happened. So we need to be very, very cautious of that fact.
Well, it's not that they don't honor the stops, it's just that unfortunately the stops are market orders. They're not limit orders. Like in the stock market, they're limit orders, and they have to fill you at that price.
Right. And
Unless,
here, this.
because the thing is, with a limit order, it can't really jump the market, you know.
Right, exactly. And here, if there was nobody to take the other side of the trade from me, because essentially, I'm short, so essentially what that means is somebody's got to be willing to buy my position, and it was, I'm on an ECN, so there was probably nobody there that was willing to go and buy where I was willing to go and sell it at, and so for that reason, it just wouldn't exit until it finally got up, and then, and of course, as soon as it did exit me, what did it do? It plummeted down, 20 more pips, but that's that's the market thing.
Yeah. So I guess when you talk about, lines in the sand, and as you said, you might have had a stop put in there if had you been long, and the next thing you know, instead of maybe taking a 10 pip loss, you could be looking at a 20, 30, 40 or pip or
Or
more
more,
loss.
yeah. Yeah, and that's always the scary thing about when you're trading, especially when you're trading forex, like you said, where this everything is being done basically as market orders, and because of that, you got to make sure the brokers love to give you more margin, and margin's great, but the thing is, margin can wipe you out too very quickly.
Yeah. So yesterday I was talking to the boys and girls of non-binary traders, um, about lines in the sand, and I was saying how I use the open, as one of the lines in the sand, and we were discussing the buy zone. So maybe you could talk about the Walmall method in terms of lines in the sand.
Yeah, and that's exactly what the Walmart method is all about. Is you're drawing a line in the sand, and what you're basically saying is, hey, if I cross this line, there is a good, based on statistics, a good chance that it's going to go and continue in that direction. Don't know for how much, but there's a good it's a good indicator, and the reason why it's a good indicator is because, and we've said this many times before, and I'll say it again, is that generally speaking, if you're trading the pound dollar, which is what I trade, typically, now today's a strange day, You know, I will admit it, today's a strange day, but you look back through history, most days at the time that we're making this recording, which is 8:35 Eastern U.S. time, you know, typically this hour, the pound dollar is going to move somewhere around 25 to 35 pips. It does it almost every single day. There's some days, sure, that you may get a 17 pipper or an 18 pipper for the hour, but it's so far and few between that, you know, it's going to happen. Well, where are the Walmal lines? Where are we drawing those lines in the sand, so to speak? We're drawing them every 10 pips. Well, if we're going to move 30, 35 pips, well, that means it's got to come out of one end or the other end or both. And therefore, if that's the case, you've got a chance to make money. Now, here's the thing. This is where people get themselves into trouble with the Walmal method. You need to be willing to go and say, this ain't working. You know, you got to be willing to go and cut your losses and say, this isn't working for whatever reason. Yeah, fine. It went and let's say we crossed the 10 line, you know, and just as a number to throw out there. And it crosses it and only goes over by 1 pip, maybe only 1 point, and then turns around and starts heading towards the 20. Well, guess what? You know, guys and gals, as they used to say, you know, it's not working for you. You know, maybe this is a trade that you just get out of, take a small little loss and just wait for the next opportunity. And that's how you got to make money. You got to be willing to go and say, hey, it's just not working. You know, I know a lot of folks want to go and try to set this up. In fact, there's one trader out there on the Facebook group, and I've been talking to him, you know, through text messaging and whatever else. And, you know, he's adamant about wanting to make this a set and forget type thing. And it may work. I don't know. I've never tested it as a set and forget, but you know, for me, I just don't, you know, I'm not going to do that because I'm making money the way I'm doing it. So I'm not going to do a set and forget. I've got the time to sit in front of the computer. So I'm going to go and do that. I'm a little weary about doing set and forget because so many times it'll go and cross the line and then chop at that line and, you know, and then turn around and go all the way the other direction. Now you're taking a big loss. And meanwhile, you could have gotten out with a small loss or maybe even a 1 or 2 pip gain until it ran the other direction. So that's what, you know, that's what I like about setting lines in the sand. So what happens is I go and, you know, I get into a Walmal trade, you know, and before I even pull the trigger on it, I already know where I'm going to get out if it goes against me. I already know where I'm most likely going to get out if it goes in my direction. The caveat on that is that the trade just doesn't work out. It doesn't do what I expected it to do. Well, then I may go and pull the trigger again now a little bit early.
Right. Now, you know, you mentioned about trades not working. So if you look at this hour, I've got a 5-minute chart up. It hit the 50 line like once, twice, and then on the third time it broke it and actually broke out of the previous hour's high at 56, and then it turned around.
Right. Yep, I see that. Yeah, and that's exactly right. You know, and and it's funny because I was long at the beginning of this hour, and I took the long on that, and then what happened was it went up and it got to 5 pips, and then it came down, you know, and when it came down, it put in on the 1 minute candle or 5-minute candle rather, it put in a doji, and you know, I said, you know what, it's coming out of off that 2 ball on the top. It's just not looking good to me. You know what I'm going to do? I'm going to go and take my trade, take it off the table, put some pips in my pocket, and then at the same time, I'm going to put a reversal trade in here. And to be honest with you, I was only looking to make, you know, 2, 3, maybe 5 pips coming back down towards the 40. That's what I was looking for there, you know, and that's when, you know, as they say, all hell broke loose.
That is funny.
But, you know, does that happen all the time? No, of course not. But it just, you know, it makes you feel good when it does happen. It just seems like so many times where, you know, as traders, and we see that happen and it goes against us. And it's nice to see that sometimes it goes in our favor.
Right, right.
But, you know, and the thing is, you know, even drawing a line in the sand, you know, even on that trade, that second trade that I took, you know, the reality is that I was drawing a line in the sand saying, okay, this this is a trade that may be a little bit risky, and what happened was I went and stacked in 2 times after that because on the 1-minute chart, I saw reasons to go and continue to go and stay in the trade. So I stacked in 2 more times, because, it went in my direction, but it only went in my direction by, I think, a couple points, not even pips, but a couple points each time. And so I said, I'm just going to go and take the chance and do it, I'm at my limit of what I'm willing to go and lose on a particular trade if my stop loss is adhered to, but I'm willing to go and take that risk, so that's okay. So I'll go and take the chance. And, that's part of it. So I drew lines in the sand. The only thing I didn't put in is I didn't put a TP, and the reason I was kind of lazy, and I'm glad I was lazy, but I didn't put in a TP in there. And, that's why I got a little bit lucky on that one. But I did, and I will, and I did have stop losses in there. So, especially the first trade, I admit I did not put a stop loss in. I was just going to play it by ear and see what happens. The second trade, as soon as I put in and stacked in and said, okay, now I got to put a stop loss in because now I've got, I got serious money on the line here. I got to put it in. Obviously, in the third one, I went and put a stop loss in and went back and actually put a stop loss in on the first one.
Right.
And those lines, those stop losses, they're lines in the sand too, because, and those lines in the sand there are just as important, if not, in my mind, more important than the lines in the sand of terms, a lot of times we say, that's a line in the sand, that's where I'm going to jump in, that's where my method says to get in, I'm going to jump in there. Well, I'm going to go and say something that may be a little bit controversial to some people, and that is that the line in the sand for where you jump in is not nearly as important as the line in the sand as to what you're willing to go and lose. And the reason why is because there's always going to be another trade that comes around the corner. You think about that big, huge jump down, okay? And if you look at I'm looking at a 1-minute chart, if you're using, the 3LZZ method or anything that resembles that, you could have gone long at the bottom of that, because you certainly had a good signal there, and you could have picked up 25 pips in the other direction. And you had lots of reason to do that too, because you had those big return bars that we talk about. You had a pattern that was there that makes sense. So if you missed that big move down, it wouldn't have made any difference because you still could have made your money in the other direction. They always come. They always and always, always come. So knowing that, that's okay. But the line in the sand that you can't mess up is your stop loss. How much are you willing to burn in the street if this doesn't work out and go in your direction?
Exactly. Yeah, so I just brought up the 1-minute chart showing the lower high, which is definitely a line in the sand because it's a line that moves. So what we're looking at now, if you were to look at this, an hour from now, these lower highs and higher lows may or may not be in the same place.
More than likely, especially the one I think on the one on the bottom, I don't think that one is going to be in place. It's probably going to move. The one on the top is going to probably stay there a little bit of time just because we had that huge return bar that got put in there. So unless that return bar gets filled, it's probably going to stay there for a little bit of time. Or if it does move, it's only going to move down a little bit.
Yeah, I don't know if anybody saw, but the DSLR scalper indicator just it clicked an entry signal there right around, I guess the entry's at 38,195.
Yep. So yeah, I used to take a lot of those trades, and I kind of worked with you on trying to go and systematize that, and they work out. What I do is just so I don't overtrade, which I do, and I'll fully admit that here on videotape, as Wolf Warner used to say.
Yeah, we know you're an addict. That's been established.
But I, generally speaking, try to stay away from those trades a little bit. And not stay away, that's wrong.
Actually, we're going to have to do that tomorrow because the fastest 15 minutes in trading is up. So, traders, I hope that helps you a little bit more with the line in the sand, and we'll revisit it tomorrow and the next day. So just remember, when you're at your trading platform, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.